So after the sharp decline in April, markets saw a big earnings season rally in May. Should investors be on guard for a so-called June swoon next? Let's do a technical analysis of where the markets might be headed. Sid Mokhtari is joining us now. He's Chief Market Technician at CIBC Capital Markets. Thanks for coming in.
Thanks for having me.
Let's talk about the TSX first, hitting all-time highs. We've seen a number of runs there. Are you seeing indication or indicators that it could continue?
I mean, our general theme is it's that breadth is so good that there is certainly something out there for everyone. We find ourselves talk about a lot of names, a lot of sectors. We're finding ourselves talk more about the cyclical sectors, offense over defense. We're showing good beta characteristics in the market. So even though market seems to be overbought by some measures, we think dip buying will persist, just given how strong breadth characteristics are developing.
Can you explain, please, the breadth characteristics? What
Sure.
Does that look like?
Breadth is a rate of change of advances relative to decliners, percentage of stocks above key averages, and the magnitude of participation within each sector during rally days. And we see that broadening out. And when breadth broadens out in that fashion, we tend to see better, buy the dip condition that develops in the market. Until we start seeing deterioration in market internals, which we're not seeing. We're in fact seeing a healing market backdrop. We think the underlying trend forces are likely to persist. So this narrative selling may go away. We don't think that should be the bias as we go forward. In fact, in the past 5 years, we've seen, May strong, June maybe has had some dips or soft behavior, but it has a very strong rally again into July. So we continue to think buying the dip, at least for the next 2 to 3 months, makes sense to us.
Okay, talk to me a little bit more about the sectors you see that are getting this momentum.
Sure. In the U.S., we certainly believe that this is a large cap cycle. It's, we constantly talk about S&P 100 over Russell 2000, S&P 100 over S&P 500. So it's definitely a leadership that has resumed again. And we're seeing it going back into Mag 7 again. And that's a big part of the S&P 500. So technology is certainly, carrying this, bull right back up to the right side of the ledger. Now, if we look at financial in the U.S. as a relative strength against the S&P 500 and take away the Mag 7 from that, we see financial actually continuing to show very well. We do the same thing with industrials, and that's, again, another positive set of characteristics in relative terms. So we think these 3 sectors do have a good weight within the S&P 500, and that should be able to keep the benchmark index nicely buoyed.
Okay, so technology has become that base again for just movement up. It hasn't completely recovered, though, from where it was in April.
It is a market of stocks within technology, if I may say so, because it's not as broad as it was. It truly was never as broad as somebody would like it to see, just because of the power of Mag 7 that have been dominating trends on the upside. But nevertheless, still shows quite well on the surface. On an equal weight basis, not necessarily the best picture, but if you are estimating where to be, you want to stay focused within the Mag 7 and related areas of focus in that area.
So are there certain stock picks in each of those sectors gaining momentum that you like?
Within Canada or U.S.?
Let's start with Canada.
Oh, sure. In Canada, we certainly, like I said, on a monthly basis, we come up with 10 best ideas. We'll run them through our matrix process. Looks at, like any other matrix, a series of factors that we check mark. We do see that, industrials in Canada are still showing quite well. We went after some that are just beginning to emerge, and one of them, exchange income, and that's EIF. That chart looks good. Seasonal backdrop with seasonal tendencies are very good for that stock. On the fundamental desk, we like that name. We run it by our analysts on a regular basis, and it's a name that does have positive catalysts. So that's a name that was cleared for us to come in. So that's a name that we like. In addition to EIF, there are a whole bunch of other names in industrials, but we chose that as for this month. We had Stantec last month, did a good job. We rotated faded out of that and put it into EIF. We also have financials. Sun Life, name that was lagging for some time because of its fundamental, and they put out some great numbers. The stock broke out of its range, shows quite well on technical basis, and we generally like where the rates are. It's boring. A lot of life goes out there, and Sun Life also has a lot of U.S. Capital, so I think that's another net positive. So I think Sun Life definitely fits there. Within technology in Canada, like I said, I like Beta. Shopify, fits that basket of ideas for us, and I think Shopify is a good pick as well. So we also can talk about gold and silver. They're showing quite well on that front as well.
A lot of the gold stocks are moving today. They're doing pretty well. Indication, I guess, of renewed tariff threats, what OPEC Plus is doing. I'm just wondering what your forward look is on gold.
Well, we think the best part of the seasonal forces are as you go into late summer. Gold has been consolidating from a time perspective, not so much amplitude or price. As long as gold stays above 3,000, to us, it's a good condition. Gold stocks, Canadian gold stocks will benefit. In C dollar terms, you're looking at 4,000 plus for gold commodity, and that's another net positive for Canadian gold stocks. And we see a lot of junior Canadian gold stocks that are doing very well. But generally speaking, our gold, thesis is higher. We're looking at 3,650, 3,700 on the upside once we get through the 3,500, recent peaks. So silver is the one that is quite interesting to us, has lagged gold commodity, and I do think that that should be able to do a bit of a catch-up trade on that.
I've heard a lot of people say exactly that it's lagging. How much would you say it's lagging?
Well, it has lagged both in terms of its historical ratio basis, but also its momentum factors measured by mean reversion indicators. They've all reached very deep trough levels that should be able to give that mean reversion propensity to silver over gold. We're already seeing that mean reversion beginning to resolve, and on the upside, we'll look at XAG to as high as $38 from where it is today. So we generally like silver on that front.
Got it. All right, Sid, I have to leave the conversation there. I'm out of time, but thank you for coming in. Appreciate it. Sid Mokhtari is the Chief Market Technician at CIBC Capital Markets. Coming up next, we'll discuss